On a VA loan, how much can a seller contribute towards closing costs and how much towards seller concessions? This is one of the most common misconceptions, one of the most common things I see people get wrong in regards to seller concessions and closing costs on a VA loan. In the VA's eyes, they're two entirely different things. So what are they? In this video, we're going to go over that. And if you stay tuned towards the end, there's probably a seller concession that you were not aware of that's extremely powerful. So stay tuned. All right, in today's video, we're going over closing costs and seller concessions. How much can each be contributed to by the seller? So I think it will help if I pull up my iPad. Let me share my iPad screen, and so we can go over this together. So what is the limit from the seller that can go towards closing costs? Well, you'd be happy to know there is no limit in regards to how much a seller can contribute towards customary closing costs for the veteran, for the buyer in this. So what are some of those? So let's say the appraisal. It is a customary closing cost. Escrow fees, title fees, the pest inspection, which is usually mandatory depending on where you live in the US. If you live in, like here in Texas where I live, you're definitely going to have a wood destroying insect, otherwise known as a termite inspection. Owner's title policy, that can be paid for by the seller. It can go towards closing costs. So these are all, there's no limit on these closing costs. So seller concessions, on the other hand, it does have a limit. And this is one of the common things that you hear people talk about. This is the 4%, okay? So what I mean by 4% is if you got a $400,000 house that you're buying, $400,000 loan, 4% of that is $16,000. That is the maximum amount a seller can contribute on a VA loan. So what goes into items that the seller can contribute to on behalf of the veteran? So one of those VA says is the VA funding fee. So that is a seller concession that they can pay for on behalf of the veteran. Prepayments. So prepayments of taxes, of insurance. Sorry about the handwriting. That can be paid for. Borrower's debts. This is a big one. So if you have any debt that has like installment debt. So let's just pretend you have a $4,000 truck loan. The remaining balance, you're paying $500 a month and it's being counted against your DTI and you have $4,000 remaining. Seller concessions can pay for that. It can actually pay off your debt at closing, which could theoretically help your debt to income ratio. Maybe you weren't going to qualify with that payment and now with it removed, you qualify. This is massive. The VA loan allows seller concessions to pay off your personal debt. That is massive. So what else goes towards it? We talked about taxes. We talked about insurance. HOA fees is part of that. Discount points is a big one, okay? Especially right now when rates are a little higher, people are using discount points. So you know what? Discount points up to 2%. A lot of people think these are seller concessions. You know what they actually are? These discount points up to 2%, in the VA's eyes, they're up here. Where are we going to put them? We're going to put them right there. They're part of the closing cost, okay? So the VA says discount points over 2%. So discount points over 2% are considered seller concessions. So if you have 3 discount points that you're paying for, 2 of them would be considered closing costs and 1 of them would be down here in seller concessions. And the last thing that I want to talk about, so let me make some room here for you. Let me get rid of that. This is massive, okay? This is a little known thing that people don't know about that seller concessions can pay off is if you are renting and you're going to break your lease and you're going to incur a penalty and you're going to, say it's like $2,000 to break your lease and move out, seller concessions can actually pay that off. You can pay to break your lease in an apartment or a home or whatever, and it can be paid at closing by seller concessions. So a lot of people think that they need to wait 4 months or 6 months or 8 more months before they can, leave their rental and buy a house. If it makes sense and you can afford it, you can buy a house now. And if you have seller concessions, it can pay for breaking that lease. So that is massive. You need to make sure that you're working with a realtor that knows how to structure this in the contracts, knows how to structure it to maximize how much your seller's concessions are going to go towards closing costs and how much are going to go towards actual seller concessions. So I hope y'all learned something from this. Please reach out if you have any questions. Thanks.